PayPal just released their latest quarterly figures, a pretty good report, not a perfect one, but a pretty good report. But at the time of making this video, stock is now down 5 to 6% or so. Of course, there's still the earnings call that will happen. So the stock movement can change when the market will open. So let's discuss exactly what has happened. Of course, I'll follow up with some extra commentary if anything extraordinary happens during the earnings call. We also already covered the SoFi earnings report. If you missed that, that will be in the top right corner. So let's jump right into this. If we look here at a major overview by Brad, Stock Market Nerd on X, you can see that mostly this was a pretty good quarter, right? They missed a little bit on revenue, missed it by 0.5% and met the guide. They beat TPV estimates, they met GAAP EPS estimates, beat GAAP EPS guide by 2 cents. Then as for guidance for 2024, roughly reiterated the GAAP EPS estimate, which missed by 3 cents, but they raised low to mid-teens EPS growth estimate to high teens, which beat, and they also raised low to mid-single digit transaction margin dollars growth to mid-single digits and reiterated the $6 billion in free cash flow. So overall, good quarter in my opinion. We'll dive a little bit deeper. Now I've already seen some comments saying, oh, but this was priced for perfection. No, not really. I'll show you later in this video when we'll do the reverse DCF. So, okay. Let's dive a little bit deeper. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. By the way, share count fell by nearly 7% year over year. I mean, yeah, if you're generating that much free cash flow and the stock doesn't move much for a long period of time, you can buy back more shares. Anyways, moving on here, and maybe I'll remove myself so you can see everything. So first couple of comments by Alex Chriss, President and CEO of PayPal. PayPal delivered strong financial and operating results during a highly productive third quarter. We are making solid progress in our transformation as we bring new innovations to market, forge important partnerships with leading commerce players, and drive awareness and engagement through new marketing campaigns. We are raising our full-year non-GAAP guidance and are pleased with the strength we are seeing across the business. We've built a solid foundation in this last year that will serve us in the years to come. By the way, with regards to balance sheet and liquidity, cash equivalents, and investments total $16.2 billion, so they have ample liquidity to do whatever they want. Debt total $12.4 billion. By the way, not all debt is bad. They also returned $1.8 billion to shareholders by repurchasing approximately 28 million shares of common stock. On a trailing 12-month basis, they returned $5.4 billion to stockholders by repurchasing approximately 87 million shares of common stock. Yeah, when you'll see this business fire on really all cylinders, because there's still a long way to go, we're going to be looking back at these buybacks and say, oh, thank you very much, maybe even buy more. All right, so TPV for the quarter increased 9% year over year. Revenue increased 6% on an FX neutral basis as well. Transaction margin dollars was up 8%. Non-GAAP EPS up 22% and free cash flow is up 31% to reach $1.445 billion. Now, if we look here at a couple of metrics, first of all, active accounts. First time in a long time, well, since Q1 2023, that it grew year over year. It only grew 1%, but it grew. It grew, and we're now at 432 million. If you look at transaction per active account, that's at 61.4 million. That's up 9% year over year. Now, I just want to say one thing. When we're going to do the reverse DCF, you're going to see that free cash flow for the trailing 12 months is higher than what it's going to be for 2024. For 2024, they reiterated $6 billion. Right now, trailing 12 months, that's just over $7 billion because Q4 of 2023, well, you can see here a huge increase in free cash flow. Then looking at the transaction margin details. So first of all, transaction expense is down quarter over quarter. The transaction expense rate is now at 0.91% compared to 0.95% in Q2, and same quarter last year that was 0.93%. They say here the 2 basis points reduction was driven by favorable product and geo mix as well as rate improvements. Then if we go and look at transaction margin dollars, that's up 8% year over year and up a little bit quarter over quarter. As for transaction margin, that's now at 46.6%. So that's now 2 consecutive quarters of growth and year over year growing here as well, 115 basis points. Then when we look at total take rate, that is still down, was expected, down to 1.86%. Transaction take rate is at 1.67%. They say here, transaction take rate is down 4 basis points compared to a 3 basis point decline in Q2, benefiting from PSP volumes and Venmo, offset by branded checkout, FX, and other merchant services growth, payouts in this case. By the way, as for Venmo TPV, that continues to grow 8%. As you can see, it's been pretty stable for a while now. But if we look at the other segments, so we look at branded checkout. Branded checkout is up 6% year over year and 27% of the total. As for PSP, the unbranded one, that's up 11% year over year on FX neutral basis. That's 36% of the total. Venmo, as we've just seen, up 8% and 18% of the total, basically unchanged. If we look at P2P ex Venmo, up 5% and 8% of the total. eBay down 3%, still 2% of the total. So total TPV increased 9% for the quarter. Last quarter that increased 11%, and same quarter last year increased 13%. They say the following on each of those segments. Branded checkout TPV is up 6% with continued strength across large enterprise platform, marketplaces, and international. As for Venmo, that's growing consistently with 4% growth in monthly active accounts. PSP TPV decelerated from Q2 while Braintree continues to contribute to transaction margin dollar growth. So overall, this is the picture that you're getting here. Transaction revenue up 6%, primarily driven by Braintree, branded checkout, and Venmo. Other value-added services or OVAS revenue was up 2% with higher interest on customer balances, partially offset by lower credit revenue. Transaction margin dollar up 8%, driven by interest on customer balance, tech leg risk, loss improvement, branded checkout, Venmo, and Braintree. Then when you look at non-GAAP operating income, that's up 18% year over year. Non-GAAP operating margin 18.8%, and that's up 194 basis points year over year. And non-GAAP EPS $1.20, that has improved by 22% year over year. If we look at guidance, so for Q4, they expect revenue to grow low single-digit growth. That reflects impacts from price to value strategy and prioritization of profitable growth. As for non-GAAP EPS, low to mid single-digit decrease, approximately $1.07 to $1.11, reflects elevated marketing spend to support key initiatives and new products. Before, they said that's going to be mid single-digit decrease. Then as for GAAP EPS, approximately between $1.03 and $1.07. Previously, they expected $1.05. Now, as for the fiscal year 2024, full year 2024, transaction margin dollars is now expected to grow mid single digit. That's up from low to mid single digit. Non-GAAP EPS, high teens growth, previously low to mid teens growth. GAAP EPS approximately $3.92 to $3.96. Before, they were expecting between $3.88 and $3.98. As for free cash flow, no changes there, so approximately $6 billion, and share repurchases also $6 billion. Now, for those that said that PayPal was priced to perfection, let me just show you what happens when you do here a reverse DCF. If we look at PayPal free cash flow trailing 12 months, like I said, it's just over $7 billion. But we know for this year, it's going to be $6 billion. So we're going to do both cases, right? Terminal growth rate, 4.26%, discount rate, 8.82%. How do you reach that number? Basically these two right here, terminal growth rate plus implied equity risk premium. Where do I get the 4.26%? It's basically the 10-year yield. So yes, previously it was 3.76. Actually, a month ago it was 3.76. Now 4.26%. So a big difference there. And then, of course, you can add execution risk if you want. But just to show you, free cash flow trailing 12 months right now, the implied growth rate, we're putting this at 0. The estimated intrinsic value still sits 53.2% higher than the price we're at today. So yeah, price to perfection this, price to perfection that. Now, if we go and put here the $6 billion in free cash flow, We don't change anything. Now, 30% upside from the price we're at today with 0% growth for the next 10 years in free cash flow. I don't know about you, but yeah, I don't see this as price to perfection or anything close to that. Now I know what some will say, oh, but the discount rate has to be higher. Okay, I put it here at 10% right now. And even if it's at 10% right now, the implied growth rate sits close to 1%. So again, I say PayPal still very, very cheap, all things considered. Of course, execution is key, right? You want to see them continue to grow and actually maybe grow faster than expected. I still think that 2025 will surprise a lot of folks because I do think that that's when we're going to see maybe more advertising come into play. But that's just speculation for now. And so while currently the stock might be down, again, it might be up when you're watching this video because the market opens and they said something very positive during the earnings call, so things can change. But to me, that doesn't change anything. This was a good quarter. The company is doing very, very well. The stock, in my eyes, is still very cheap. And if it drops lower, then it drops lower, it becomes even cheaper. Of course, I'd like to see stocks go up and up and up until infinity, but we know that's not how things work here. So, okay, don't look at the stock's reaction and make your conclusion. Look at the earnings report, listen to what management have to say, and then make a conclusion. Me, I'm very happy with what is happening with PayPal right now. No intentions of selling any of my shares anytime soon. So that's it. That's all I've got for you in this video. Long day ahead. So stay tuned for everything. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.